Hello and welcome everyone to today's presentation and discussions on the findings of the fifth annual Sporting Goods Report, which we gave the title, The New Balancing Act, Turning Uncertainty into Opportunity. We are indeed very excited to have you join us. I'll probably kick us off with introductions in a second, and then we'll run through sharing the key insights from the report and then open up for Q&A. On Q&A, a quick hint on how you can submit your questions. You should see actually a Q&A button in your Zoom through which you can submit your questions directly to us presenters. The questions will remain private and only us presenters will be able to see them. And of course, we aim to address as many as possible. If there are similar ones, we'll try to get bundled some of them. And thank you indeed for those of you who already submitted some questions in advance. The Sporting Goods Report has been a collaborative effort between WFSGI, the World Federation of the Sporting Goods Industry, and McKinsey Company since its first edition in 2021. We have continued this very fruitful partnership, and we are now very proud to actually share the fifth version and its finding with you today. When I talk about us, I'm talking about myself, a partner, McKinsey partner from the Zurich office, and one of the leaders in our global sporting goods sector. I'm joined, as every year, by Emma Zwiebler, the CEO of the World Federation of the Sporting Goods Industry, and two of our co-authors of the report, Pamela Brown, partner in the US, working in McKinsey's apparel, fashion, and luxury sector, and Eric Fallader, partner in McKinsey Canada, focusing very much on the global fitness and wellness sector. So you will hear from all of us today. I will start by giving a quick overview of what the 5 main themes are that we identified in this report and which we'll go through in this presentation. So this year's report has been titled, as I said, The New Balancing Act, Turning Uncertainty into Opportunity. And indeed, I think as all of you can agree, we continue to operate indeed in a very uncertain environment where rules and consumer demand change rapidly. But we still see multiple trends and pathways that are promising to pursue going forward. And we have identified 5 key themes that we think should be top of everyone's agenda for 2025. And those are, number 1, chasing elusive growth and rethinking of the value chain. Over the past year, the sporting goods industry has really persevered through a lot of economic volatility, also geopolitical tensions, and of course, as always, evolving consumer behavior. Slowing growth forecasts are increasingly compelling executives, I would say, through the board to focus on a dual agenda. An agenda on the one hand of revenue growth and on the other hand of productivity improvements. And that is a balancing act in itself. On the one hand, as I said, chasing growth that is increasingly granular, increasingly difficult to generate. And on the other hand, constantly improving the bottom line, very much by optimizing along the entire value chain. The second topic, and maybe the most important one, has to do with physical inactivity, particularly physical inactivity as the biggest untapped market opportunity that exists for the sporting goods industry. We will hear from Emma that over a third of adults globally are considered inactive. And that trend, unfortunately, continues to point upwards. So already today, we have more than 1.8 billion people. That's more than double the population of adult India that are inactive. And that, on the one hand, is a tragedy. On the other hand, as Emma will show us, an opportunity, because it's a large growth potential that, if addressed, really is a win-win-win for the individual, society, and the sporting goods industry. Third, Eric will talk about active lifestyle as an identity. Of course, we have talked about the desire for people to have an active lifestyle, the trend of athleisure that stems from them, and all of these. But increasingly, we see a widening activity gap with a subset of very active, hyperactive consumers for whom activity and an active lifestyle is the primary identity. And we will explore what this means and also what this has for implications for the industry. Fourth, Pamela will lead us through what we call market share upheaval, with large incumbents being challenged to up their game. So here we talk about the battle for market share, how it has intensified over the last few years, and how it's likely to intensify even more in this year, as more and more challenger brands win by targeting very specific growth pockets with a lot of authenticity and expanding their reach. And then fifth, I will talk about the boom of live sports and the blurring lines with entertainment. Not only about the resurgence of in-person fitness and the blending of live sports and entertainment, but also the increase in fascination for live sporting events and the new avenues for growth these offer. So before we jump into these 5 topics, as always, we start with a little bit of number and an updated outlook. If you have also read our previous reports, you probably observed that we now have a slightly softer growth outlook of 6% annual growth for 2024 to 2029, down from 8% pre-pandemic and 7% in the last 2 to 3 years. These developments are driven by a number of factors. As I mentioned, balancing revenue and productivity is critical to many companies, and that double focus means that growth is a priority, but not always the only and not always the first priority. Second is that we see increasingly cautious consumers who are prioritizing non-discretionary items and often holding back on discretionary spend, also shifting to lower price retailers and generally decreasing their loyalties to brands even further. It's important to adapt to this behavior, but overall, it also means a little bit of a softer outlook. Geopolitical uncertainty, of course, plays a role when we talk about a softened outlook. Per our latest research, everyone is concerned about and everyone is expecting significant impact here. And then we should talk about one fact that also we have listed in the report: sustainability. It remains a priority, but it faces trade-offs with short-term business factors. So the number of executives who prioritize sustainability is actually down to a bit above 50%, down from 2/3 last year. And consumers are equally conflicted. The intent to action gap of people who say that sustainability matters to people who are actually willing to pay for it is larger than ever before. So with that, I would hand over to Emma to talk about physical inactivity and the opportunity it presents.
Thanks, Alex, for the overview. And as we move into chapter 2 of the report, we are, as Alex mentioned at the start, actually returning to a bit of a familiar theme for the reports that we published previously, and for those of you that have attended our webinars. And that is to rising physical inactivity levels and the implications for the sporting goods industry, both on a global but also on a local basis. Now, in previous reports, we have really focused in on the risk that this trend presents. And this year, we will give an update around where we are. But we also really want to highlight the opportunities that we believe this trend presents for our industry. Starting off, though, with some of the statistics that Alex mentioned at the start, drilling down a little bit into them, and a short reminder of where we are on global inactivity. The short response is that physical inactivity continues to rise, and it's not something that we can categorize as a temporary setback or something that's linked to the COVID-19 pandemic. According to the latest data published by the World Health Organization back in 2024, we're now at 31% of adults globally being deemed inactive. That's the 1.8 billion you see on your screen, and that's up 5 percentage points since 2010 and is projected to rise even further to 35% by 2030. And unfortunately, when we look to youth, when we look to that next generation of consumers, fans, and employees, the situation is worse. And we are looking at 81% of that community being deemed inactive. So a reminder of what that data really means for us as an industry and why we continue to believe that leaders should care around these data points. The WHO has already calculated that if nothing changes, if this inactivity trend continues, 500 million more people will fall into ill health as a direct result of inactivity. So no other causal factors, and at a cost of $300 billion to public healthcare systems. What does that mean for us? Well, more sick people means less people moving and buying your products. It also means a less productive workforce. And of course, it means less money in the global ecosystem to resolve the issue. So that's why we've continued to push the message in our reports and in our webinars that this is not just a health crisis we are talking about. This will be a business crisis for the industry if we do not start to take action now. But if that was the message from the previous reports, this year we really wanted to focus on the opportunity that we believe is presented by this inactive market. As Alex mentioned at the start, that 1.8 billion inactive community is a market that's bigger than China, and it's twice the size of India's population. And we think there is a real opportunity for our industry to turn it into an amazing active consumer market. And there is no industry that is better placed to drive its own success and growth than the sporting goods industry. So if we move to the next slide, I think what is really positive from our perspective as we look at this biggest untapped market is that our industry is not starting from ground zero. We are already doing a lot of work in this space, but like any new market you try to enter, tackling the inactive population requires a different approach to business than tackling the already active or slightly active consumer. And within our report this year, we've really focused in on 3 priorities that we believe industry executives should integrate into business plans going forward to really tap into this opportunity as we've presented it. So highlighted on the screen in front of you, you see those 3 opportunities, and we've given a couple of examples in the report that I'll spotlight here around companies that are already driving forwards in this space. So priority number 1 around investments in product innovations that don't just get to higher, faster, stronger, but actually help remove barriers to physical activity. And some of the examples we've spotlighted include Adidas Stay and Play line that helps tackle women becoming active and staying active, and Nike's Modest Wear line that allows people to be active while respecting the boundaries of cultural and religious practices. And when we look at priority number 2 around campaigns designed to raise awareness and change perceptions of people being active, we're really looking at one of the key strengths of the sporting goods industry, engagement and reach with the consumer. But here we're not talking about marketing campaigns focused on product, but marketing campaigns that promote the benefits of being physically active for all, highlighting real people and making movement and activity seem accessible and inspirational to people who might not necessarily have ever thought that sport or activity was something for them. And some of the examples we've highlighted in the report include New Balance's Run Your Way, which highlights athletes of all kinds, shapes and sizes being active through running, or ASIC's Desperate campaign from last year, which for those of you that have seen it, focused the protagonist from Succession, Logan Roy, highlighting that he's not really the thing to fear in the office, but actually inactivity and the impact of that is. And finally, the 3rd priority that we think is critical for industry to focus on is around enhancing youth engagement in sport and physical activity. We know that early positive experiences of sport movement is one of the key determinants in ensuring that they go on to embed physical activity in sport in their future lives. And of course, from a business perspective, that's how we ensure that they go into being part of our core active consumer that Eric will talk about in the next chapter. And some of what we see here is really progressive. Our investments around making sure that kids are becoming active in companies' own key portfolios. So Speedo Swim United initiative that focuses on getting children to learn to swim, and Shomano's school bicycle program that helps children to ride bikes. Yes, these programs are community-based, and yes, they are focused on improving health and well-being through sport, but very clearly they're also investment in business growth. So in summary, of course, we need others to play our part. The industry can't resolve this alone, and we've called this out year on year that we need governments, we need sport institutions, and we need health to play their part. But we believe this year it was important to highlight not just the problem, but the fact that we think we have solutions across industry that can help us move forwards in tackling the inactive market, and not only improving the lives of those 1.8 billion people, but converting them to become active consumers and growing the industry on the way. Thanks very much, Alex, and I will hand over to Eric now for the third chapter.
That's good. So focusing now on the other group, so the group that is active and participating in our sphere of activity here. There's a few questions in the chat that I was noticing on COVID. One thing that has increased since COVID and have not changed is the share of people that are active that say this is a core part of their identity. You see the two statements highlighted here of fitness is not just a hobby, it's a lifestyle, and fitness and my active lifestyle are a core part of my identity. And these are high numbers, right? When we see 50% of overall participants, and this is a broad section of the society, and even higher, close to 6 on 10 for younger age groups. This is something that has maintained ever since COVID. So many things have come up and down during COVID. This one is stuck. And this has foundational implications when it comes to what brands have the permission to do and how brands can actually engage with consumers as these categories become so much more important to a lot of them. We can go to the next slide on page 11. I'll just go to a few, right? Like the rational benefits that a brand needs to deliver on don't necessarily change, right? This product is ideally catered to the activities that I do. This product is of good quality and so on. What changes when these categories become this much more important all the way to being part of people's identity is the relevance and the ranking of emotional benefits that these brands deliver on, these products deliver on. And that's what we see as a big opportunity. This is permitting some brands that all of you will have top of mind to enter rather quickly in other spheres of activity to get the permission from an existing consumer audience to do so. It is allowing for some brands to develop further better products to deliver on in a way that they couldn't before. So when we take a look at sectors across consumer discretionary, we think this is probably one of the best tailwinds for leading brands in the sector, for challenging brands as well, because as the audience becomes more discerning of what is made for people like me, this also opens up opportunities for challenging brands, which is a good segue for Pamela, who will walk us through in the next section.
Great, thank you, Eric. So I'll take a few minutes now to talk a little bit about what's happening from the brand lens and go beneath the surface of that, that market that we've seen growing around 6 or 7% per year for the past several years. So in particular, what we are seeing is there's growing competition between what we call here the large incumbents, kind of your legacy players, and then the rest of the market. And in that rest of the market, that includes some of the challengers you see in the headlines around Alo, Viore, On, et cetera. You have a longer tail of some of the smaller but more established brands like a New Balance, Patagonia. You have true technical specialists in there. You have brands like Lululemon, which are becoming more like incumbents than challengers, just given their sheer size. And then general apparel brands who are increasingly entering into this space. So if you think of a Free People or Abercrombie that are leaning quite heavily into the athleisure and sportswear space. So previously, pre-COVID, it was really the large incumbents that were setting the pace for the entire industry. But what we've seen since 2019 is a meaningful shift in share. So, only 3 percentage points, but just to dimensionalize that a little bit, this means that the largest incumbents created around 10 to 15 billion in top line value, while the rest of the market created 70 to 80 billion. So that is a meaningful market growth and share that has been lost by some of the top players. So if we think about why is this happening, I think there's a few things. One is these challengers and smaller brands are really speaking to the consumer that Eric had just highlighted, right? Really understanding more nuanced demands and needs in the market. I know there are some questions in the chat around the COVID effect. I think COVID also opened up the opportunity for brand exploration, especially as athleisure and kind of more work from home friendly apparel became the norm for a couple of years. People were all of a sudden willing to try newer brands that really lit them on fire. There's also been increasing access to funding. So in private equity markets, we're seeing firms that are creating more value through sportswear plays versus traditional fashion. And then finally, there's lower barriers to entry. So not just D2C, as it's easier to access consumers online, but as some of the incumbents pulled away from wholesale through the 2010s, it created a void in the market that allowed some of these smaller brands to really to take share. So if we move to the next page, a few things that we think are important to be keeping in mind to continue to drive growth. And this is both for the incumbents, but also for some of those smaller brands or challenger brands that are hitting scale and facing growing pains themselves. So the first is around innovating and differentiating, continuing to stay true to your core and kind of your reason for being, but at the same time, always having newness out in the markets. When it comes to innovation, what we find are it's brands that have the most visible innovation are the ones that are winning. So whether that's a silhouette or a sole or a particular fabric, right? The consumer really needs to understand what is that point of differentiation and innovation. In terms of staying authentic, we're also seeing brands that are truly consumer or customer obsessed, right? Knowing who they are trying to win with, what they want, and kind of evolving with them. And this is always where the balancing act is quite tricky in terms of staying true to the core, but then also getting to the next ring out. Then a few points on just the how on the right-hand side. So one is around the multi-channel strategies. So not necessarily just a D2C strategy or a wholesale strategy, but thinking around what is the right mix of distribution, both within and across markets. And then finally, as you think about growth, it could be new consumers, new product categories, but it also could be around growing a brand portfolio or entering into new business models that are not about selling apparel or footwear. With that, I'll pass it off to Alexander.
Thank you. So as coming to our fifth theme, last but not least, I would like to spend a few minutes on how live events and in-person experiences are flourishing and what this means. So first of all, we just have to note that the popularity of live sport events has really increased with significant growth both in attendance and in engagement. The global ticketing market for all kinds of live events has surpassed 100 billion in 2023, and we estimate will reach 150 billion by 2030. Also, the demand for live experiences is really blurring the traditional lines between sports, entertainment, retail, and we see more and more innovative formats that mash these up, or we see them cross-pollinating each other, actually creating many new opportunities for both brand engagement and consumer engagement and thereby loyalty. a lot of the good brands are actually very selectively, in a very targeted way, are increasingly leveraging these kind of events, also mixed-use stadiums and high-experience value events, to enhance their brand visibility and their consumer engagement. Of course, being very targeted, that they're active where it fits with their mission, with their target consumer, and also with their value. Similarly, we actually continue to observe the preference for in-person fitness and events. Especially when it comes to fitness in-person classes, we see a lot of popularity. 80% of consumers participate, driven by motivation, group energy, and the specific feeling that you only get when you are in a community. That is something that across the globe, actually, and across all cuts that you can make, right, age, demographic, we see rising. People's demand for community and experience, and not online, not virtual, but live. So what does this mean for brands and also retailers, of course? There are growth opportunities to capture that result from this boom of live sport events and this resurgence and demand for in-person fitness. One is to really enhance in-person offerings, right? While having digital offerings to back them up. So develop a balanced approach to cater to both in-person fitness audiences, maximizing growth opportunities by also blending live and digital experiences. For example, enhance digital events, enhance live events, right, through virtual reality to create customized experiences in the future. But also very simple, leverage live and community events that are a good fit for your brands. Those could be large events, right? Seen and watched by millions and live by tens of thousands, or also, right, a combination of or a collection, right, of smaller community-driven events through partnerships with fitness studios, gyms, sport clubs, etc. All of that can create, right, really unique engagement that can significantly foster brand loyalty if, again, there's a good match between the brand's values, target audience, with the specific events. It's not always the ones with just the most eyes on it, it's the one with the best fit. And for retailers specifically, there is, right, a continuous and increasing need to transform retail spaces into, right, more experiential hubs that host events, that blend sport and entertainment into a retail environment. Again, of course, to attract and engage consumers, to make the whole experience of shopping less transactional, right, and much more natural and engaging, thereby, right, inviting people to stay and thereby also to shop. So, summarizing the implications of these 5 themes that run through our report and that we now, right, quickly presented to you, we want to end up with a bit of an action list. And of course, that is not the right action list for everyone. Probably it's not the right action list for everyone, for anyone, exactly as it is here. But it summarizes and synthesizes the key priorities that we think you at least need to check your strategy against and see whether these things are relevant for you, and if so, whether you have them addressed. Some of them, right, are more risks that you need to mitigate. Others are opportunities that you should address. We believe they're relevant for brands, retailers, and manufacturers alike. And that's where, right, we finalize our report and end our report on, and also where we want to end this part of the webinar, where we summarize and play back to you what we have in our report this year. That doesn't mean, though, that we end here overall. We now first want to hear from you before we move on to Q&A. There are already a few questions. And we want to ask you to quickly select which of the themes that we've presented you believe will have the biggest impact on you in 2025. You should see the question. It's not scientific, it is anonymous. So make a decision on the spot. Give you a few more seconds to think about it. And then I think we can close and have a look at the results. Interesting. Active lifestyle as an identity. 1/3 of you feels you need to address that. I think we would agree, Eric, right? That is a key priority.
I would definitely agree.
Physical activity as the biggest untapped market opportunity, growth and value chain management, market share, people with, and then, okay, we had one question twice. Sorry for that. But I think it's anyhow not scientific. What comes out is that to some extent, they all matter. And that is, of course, what we also believe. So let us now come to the Q&A. And there are already quite a few questions there, but I want to start a bit with questions we have actually received before in advance, because we invited all of you, right, to submit your question up front. And there were a lot of questions around the topic of increasing uncertainty. And increasing uncertainty in global geopolitics, in trade policies, but also in climate-related disruptions. So basically the question is, how do you see the sporting goods industry adapting its supply chain, its sourcing strategy, its market positioning to remain resilient, facing so much uncertainty? And also, what do we believe is the impact on major upcoming sporting events like the World Cup or the Olympics? What are the key risks that they face in such an unstable, uncertain world? Maybe, Emma, would you feel comfortable addressing that?
Big question for number one, but yeah, no problem. I mean, I think generally as an overarching theme, what we've identified in the report and what we talked about today is that from a business perspective, diversified supply chains and detailed scenario planning within the business, they're now not a nice to have, but they're absolutely essential to help companies ideally not just survive what's happening right now in the world, but also actually thrive. So really around the theme of this report, how do they turn that uncertainty into opportunity? But if I take the last part of that question around major sporting events as a kind of narrow subset of what's happening in the world today, I think generally what we are seeing is that change and uncertainty is now an overarching component of all decisions that brands are having to make, and they're having to be baked into anything that they are considering investing in. So, I mean, if we look at the FIFA World Cup and the Olympic Games, I mean, these are two of the biggest major sporting events in the world, two of the hottest properties within sports, and typically association with them, the teams or the athletes that compete in them, you know, not only are they sometimes been considered a bit of a no-brainer, but they were also typically being assessed on a pretty regular analysis around what is the financial and business return that we can look for here. But I think what we've seen, and not just this year, to be honest, not just with everything that's been happening from a geopolitical perspective, but certainly over the last 5 or so years, everything that's happening within the world right now and within global sports, brands are assessing these decisions and they're having to calibrate in reputational and business risk, exposure, environmental concerns, human rights concerns, anti-doping concerns, and more. And that means that within the brand, these decisions become less of, let's say, a vertical sports marketing decision. Do we invest? Do we not? And much more of a kind of holistic horizontal business decision, taking into account very, very many different departments within a company and different considerations. And while I would say on the one hand, that sounds pretty complicated and can have the, let's say, downside of slowing down business decisions, I think what we see is that on the plus side, when the alignment is there, and this is a plus side for industry and for those rights holders that we're talking about, that when the alignment is there, the opportunity for, let's say, a deeper and more purpose-driven partnership, focusing on some other factors that we've talked about in this report, like growing physical activity or grassroots sports, also come into play. And that can really pay dividends for both rights holder and brand.
Thank you, Emma. The second cluster of questions we received up front, and we also already have some questions around it in the Q&A right now. I think, Eric, is in your area because they are around anything digital AI. So I think you can probably summarize them as how are sporting goods brands in a best practice way leveraging digital platforms, AI, data, analytics, personalization to drive growth.
Yeah, and I've read all of the questions that came in on this before the session, as well as all the ones in the chat. I'll do my best to try and summarize them a little bit because there was quite a few. There was questions around, are there ROI to certain AI use cases today? And so we'll divide it into two. Internal practices and capabilities that could be done better with the help of AI than they were yesterday without it. It's a case-by-case basis. But I would say in general, we see companies that pursue their adoption, be satisfied with the returns on them, and perhaps more importantly, improve how much they get out of it 1 month of practice at a time. So whether this is about how to incoming calls and questions from customers, whether this is about making decisions in finance or supply chain, increasingly certain marketing activities, I think in general, those adopting are finding the right answer. The second and perhaps more exciting hemisphere is how this redefines the ability to which you can engage compellingly with your audience. And there were a few questions that were tying these to partnerships as well. Does this open up partnership potential with some of the companies that are leading on engaging consumers in their movement habits? I think there was Zwift in one of the questions. And this to us is really, really interesting because, of course, AI enables us to personalize in a way that was different later, but doing so in partnership is what we actually think is most interesting now. And I'll give the example of some of these companies which are starting to venture in the world of building commerce media networks, which enable partnerships that permit either discovery, like intercepting a new consumer in a far more compelling way yesterday, or deepening the degree to which you can deliver your full brand and product value proposition by partnering with somebody. So there was 30, 40 questions on this. This will not address all of them, but hopefully the first half delivers the ROI questions on it. And secondly, we're big believers that what is possible today at the intersection of data, AI enablement, and partnerships, last word probably being the most important. In 5 years, I think we'll see a few cool examples that don't yet exist today.
Thank you, Eric. Pamela, I think there are also a number of questions also upfront around asking what are the major trends that are shaping the future, right, of the industry, particularly when it comes to emerging and changing consumer preferences. So things like Gorbcore, running core were mentioned, but also grassroots sports as quite an increasing phenomenon and a potential acquisition channel. Is that something you can comment on?
Absolutely. So I'll start with who's spending and where we're seeing kind of the value pools shift among different generations and consumer segments. So first is, everybody's often focused on Gen Z and millennials. The reality is there's certainly spending power there, but we're also seeing enormous spending among that group of consumers that are retired and ready to spend, right? Consumers are living for longer than ever. Some consumers retiring a bit earlier, and they are all, investing heavily in their health as well as just how they're spending their time. Another thing that we're seeing on the kind of consumer segments is a real focus on women's health and the women's health boom. So greater spend among that gender that we expect to only grow as there's more focus on their own health, where historically it's been more oriented towards men. We are also seeing continued blurring of sport and fashion. So some of the, running core, Gorp core that Alexander had mentioned, but then also the collaborations that we're seeing, right? Nike and Skims, for example, brands are focusing heavily on what are the moments to collaborate to kind of drive reach, but also relevance and brand heat. And then the other point that I wanted to mention here is just around how consumers are spending, being very choiceful in terms of where their dollars are going. So certainly, with a more conscious consumer in the current economic climate, being more value conscious, and this is not just for lower income consumers, but really across the board, and especially in the middle, there are consumers that are willing to splurge, but selectively splurge, and being really thoughtful around where they're funneling their dollars, and how does that align to their values and identity.
If I could just jump in on one of the points, Pamela, you called out women's health, with that is a fantastic example, but there's even broader examples of that, right? And it points to I would say the improving healthy relationship of a broader population with the concept of engaging in activities. So maybe a little bit less barriers to intimidation because it's reserved for the few, to a more to a higher acceptance, and more than acceptance, celebration of you doing it in the way that is yours. And so that's actually leading to people spending more time innovating for everybody, right? Women's health should not feel like a niche thing, but it's the degree of innovation and focus in the last 5 years compared to the previous 100 is quite outstanding. And there are, because I saw some questions in the chat around like certain groups with disabilities. I think cognitive health is another big one. So that to us is very healthy and good news for the future.
Thank you, Eric. Emma, there are a few questions around the topic you presented on physical inactivity. Specifically, a lot of questions: where are these 1.8 billion people actually? Only in developing countries or also in developed countries? And secondly, what are some of the best examples of actually addressing it along the dimensions that you presented?
Sorry, I lost my voice there. Thanks, Alex. I mean, in answer to the first question, it's absolutely not the case that this 1.8 billion people are solely located in what we would class as middle or low income countries. And in fact, the data that was published last year, the highest rates of physical inactivity globally are observed in high-income Asia-Pacific countries, so around about 48%, and in South Asia, around 45%. But there are levels of inactivity in other regions, in high-income Western countries, for example, that are around about 28%. But I think what's easiest is when you go down to some of the key markets that we have, because this will really showcase the issue and why it's such a business critical topic for us moving forwards. So if you just take two key markets, so the US and China, and this data comes directly from the World Health Organization's Global Status Report published back in 2022. I mean, from an adult perspective, 32% of women and 48% of males are classified as being inactive. When you go to that youth population, the one we talked about, it's 64% of boys, so slightly lower than the global average, but up at 81% for girls. So right on that global average in one of the key markets for the sporting goods industry. And when we look at China, and we've talked about that, Alex, in our first report as being one of the key markets for industry growth globally, when you look at adults, you see a real sea change moving from adults to adolescent in inactivity rates. So adults are actually very low on inactivity levels, 16% of males and 12% of females. That's way, way, way below the global average. But when you move from the adult Chinese population to the youth Chinese population, you are up at 80% inactivity levels for boys, and a huge 89% for girls. So way, way above the global average. So in answer to this question, it's definitely not a low-income country issue. And that is why when we look at this, we do see a real market opportunity, because you are actually looking at an untapped market spread across some of the key core consumer markets that we already focus in on. But linking back to the second part of your question, of course, it requires a different approach, right? Every new market requires a different approach. And that's why we've highlighted those 3 key priorities. And we put some more detail in the report about why some of these interventions have really worked well. But I think it's from WFSGI perspective, it's something we're going to follow up in later in this year, really highlighting the efforts that industry have made across product innovation campaigns, and of course on that early youth engagement. But really we see those as the 3 key priorities that we can showcase change with.
Thank you, Emma. Let's also address the topic of sustainability, because we got and we are getting quite a few questions on that subject. Let me say something around it, because the questions are all about where does sustainability actually stand in terms of importance, both for consumers, but also for companies. And then I invite my co-presenters to please add on it. I think there are 2 realities that are at the moment in conflict with each other, but they're both true. One is when you look at the short-term immediate reality right now, then sustainability has dropped on the list of importance for both consumers and for companies. That is just a fact. It's not that it's not relevant to consumers anymore, but in an uncertain economic environment with more economic pressure, simply topics like affordability have risen, and the willingness to pay for sustainability has gone down. Also, when it comes to where companies lay priorities, no company has moved away or walked away from their sustainability commitments. But when it comes to what is right now the most urgent, maybe not the most important, but the most urgent thing, there are often other priorities that are right now taking more importance. That is one reality. The other reality, though, is that, of course, it is a topic that will not go away, as we all know and increasingly also see. But also companies have made real commitments to reduce particularly carbon in absolute terms by significant numbers. And with growing percentage growth every year, that means that relative, we are talking about huge gains that need to be made, let's say, over the next decade when it comes to reducing carbon intensity. We are not talking 30, 40, we are more talking 50, 60, 70% of needed reduction in carbon intensity. In order to get there, you cannot pause on it, and you need to address the entire value chain. It's a real transformation. It might not be the most urgent at the moment, but it's certainly not lost important. But maybe, I don't know, Eric, do you want to add on it? I know that's a topic you're also working on a lot.
Perhaps just add to your point of the consumer points, because I think the rest all makes sense. No need to add. Many things matter at the moment of an individual decision, and these things might shift a little bit in their ranking and importance based on context for sure. Sustainability is one of those things that matter. But to Alex's point, it does not matter in isolation. What that means to me is that it is still worth innovating and figuring out how do we deliver end, right? And it's normal, right? The stage at which we are on innovating as a joint society to deliver things in a more sustainable fashion to consumers is relatively early if you take the bigger scale of innovation cycles. I definitely think it continues to figure out what is the best way to come reconciled amongst the competing priorities at moment of choice. What are the patience we need to deal with times when maybe more things come top of mind, but there are very few consumers for which to which it is not something that matters at all. So not much more to add than this, Alex, but just to maybe encourage those who are continuing to lead the way and figuring out how do I innovate, how do I help crack this problem. We need those innovators.
Excellent. And Pamela, on the topic you presented on the competition between incumbents and challenger brands, like, as you mentioned, a Hoka and On, maybe a Gymshark, and how they have disrupted more traditional players, there are quite a few questions on what has actually allowed them to do that? What was and is the recipe behind it? And what should incumbent players do to defend or gain back their market share?
Yeah, great. Happy to take that one. So what did they do? The first thing is, that I would call out is a lot of these brands, it seems like they came out of nowhere, but the reality is they have been built, for the most part, late 2000s, early 2010s is when many of these brands were founded. They have been slowly kind of growing, right? It wasn't out of nowhere. What did they do? They really leaned into authenticity and knew who their consumer was and who they were serving. They all led with innovation. So if you think about, physically how this product appears on the market, these are, many of the brands that Alexander had mentioned are ones that you would look at and you would be able to link it to a specific brand. The other piece that they have done well is really thought about distribution and the speed at which they are going after different distribution channels, both within home markets as well as internationally, not going too big too fast and taking very calculated steps towards additional kind of avenues of distribution. Alexander, remind me what the second part of the question was.
What should incumbents do to actually gain back and win back market share?
Yeah. So I think it's a lot of, what you hear some of these incumbents talking about is, kind of going back to the core. What do they stand for? Why did consumers love them to begin with? I think continuing to innovate both with products as well as how they go to market. And then keeping an eye, I also saw some commentary in the chat, which I think is very important, is, we're talking a lot about growth, but the reality is this all needs to be in service to profitable growth, right? So continuing with a very test and learn mindset around where am I going to be investing and where are, the trade-offs that I'm willing to make. And being very, kind of calculated and flexible in that and not just growing for the sake of growth, but really, ensuring that it's profitable and incremental growth.
Excellent. Eric, there are quite a few questions on, I would say, how to balance for brands e-commerce growth while also maintaining relationships with traditional retailers, referring to the fact that quite a few brands went very aggressively direct, some with good results, some with mixed results, maybe also leaving open a flank to attack. So what would you say is the best practice today where many brands are a bit thinking left or right?
Yeah, so I think that's a very difficult question to answer in a generic way across the group of folks that are on this call, because it'll be such a unique answer. The few elements that I think are probably undeniable is it's difficult to imagine that the end answer does not include some version of both. And that number two, the way to actually get it right is really, really, really centering on any given consumer is like, what is it that I'm trying to do with them across these touch points? So those who get it right answer these questions really well. Where and how do I help somebody understand that I exist? Where and how do I help somebody, do I inspire the association between my brand and an activity or the existence of a product? Where and how do I help somebody gain confidence that my value proposition is real and meaningful? Why? I could go on forever, but those who lead in, for lack of a better word, this omni world are actually quite good, first at understanding exactly their consumer and prospect consumer and how to best deliver across these things that you need to do to help them continue to choose your products, your brand, to help them continue to accompany you in your innovation journey and what you're doing. And it is I would almost say it's dangerous to answer this in a blanket way. across companies and brands. It's a very different answer for different people. That probably feels like a very disappointing answer, but that is what I believe.
Sometimes that's the reality. No, thank you. I'll pick up one other topic, Emma, where I would also like you to contribute, because there are some questions around when the potential risk or the concern around sports washing and balancing authenticity and sponsorships, and what sponsorships are the right ones. And as Eric, I don't think there's a general answer, but I think first, it's true that brands are increasingly scrutinized, right, for their sponsorship decision, especially when partnering with leagues, events, teams, specific individuals. There needs to be alignment between the stated value of the brands and of the sponsorship object or subject. Secondly, I think a possible way to mitigate these risks is to focus also more on grassroots initiative, right, where it's often much easier to ensure that sponsorships align with brand purpose. I mean, the way that Adidas is investing in grassroots women's sports, or Patagonia in environmental activism. And then third, I think transparency and engagement are, as always, critical. Brands that really involve their community can much easier maintain credibility while supporting major events that, yes, always can also be always invite some criticism somewhere. Some particularly also upfront engagement, very openness and communication can go a long way. But Emma, please, from your experience, please add to that.
Yeah, I mean, maybe as a, and I know we don't have so much time, but maybe just as an initial point, I don't think the value of major sporting events as an asset class, let's say, and community sports or grassroots sports, it's not going to be either or, right? It is and it always will be for the industry, because they serve different purposes for brands and they serve different consumer segments, right? It's much less likely, despite some of the hype in the past around major sporting events, that they are guaranteed to provide a sustained increase in physical activity within the communities or countries that they're hosted. But they are likely to create a spike and an interest in the athletes in the already active consumer market. It's a different section of industry that you're looking at when you partner with community and grassroots sports. So for me, it's an and, but it's a different analysis for each. And maybe just quickly on the sports washing, and thanks, Eric, for giving me the slight get out around there's no perfect answer here. But I think it goes back to what we were talking about earlier, that you, as a brand, you do not have full control over a sports property, right? You can't guarantee how governance decisions are taken or where events will or won't go. You do have control, however, over where you make your spend. And that means the due diligence process, the understanding what you are investing in, becomes much more critical, especially in today's world where the spotlight on these types of partnerships and the spotlights on our industry is much higher. The consumer and the public expect a much higher deliverable in terms of human rights, sustainability, environmental factors, et cetera, et cetera. So for us, that due diligence perspective, I think, becomes very important to not get caught up in the sports washing aspect you mentioned. And when it comes to community and grassroots investment, you know, I think, again, it's a lens pivot for us. Historically, the relationships there have been kind of transactional. So it's been a provision of product and cash. And that's going to be the way that these two entities engage. If we really want to inactivity, we have to move towards partnership. So understanding what can the industry contribute and how can we work together to tackle inactive communities.
Excellent. Thank you so much, Emma, and thank you everyone for participating, actually in near record numbers. Thank you so much for your time. Hopefully it was worth it to you. We tried to get to as many questions as possible. Of course, we couldn't get to all of them. That's why we are always excited to hear from you. Here are also our contact details. Always feel free to reach out. With that, I would close with many thanks from all of us for your time. And of course, if you haven't done so yet, download the report. For that, you also find the link here.